It's Brian Shannon from alphatrends.net. Today is Friday, the 2nd of September, 2022, and we had further selling here today in the market to cap off in a pretty ugly week. Semiconductors down close to 7%. They've been the leaders to the downside. Oil lost some ground this week as well, and pretty much weak across the board. So let's look at the most important chart, the one that I always look at for my bias in terms of the intermediate term direction. As you've heard me say for the last 15 years, I have a very simple rule about buying stocks or the market, and that is on this time frame, we have a 15-minute chart, meaning every candle here represents 15 minutes of time frame of time. The 130-minute period, 15 times 130 is the period, equals 1,950 minutes. 1,950 minutes is important because that's how many minutes are in 5 days of trading. So this is the 5-day moving average. I've never referenced the 5-day moving average on a daily chart, only on intraday timeframes. And the simplest rule that I have for my bias is if the 5-day moving average is declining, then I do not trust rally attempts and I do not look to get long. Twice in the last 2 weeks, we have moved above the volume weighted average. I'm sorry, the 5-day moving average, but I didn't trust it because the 5-day moving average was declining. And that simple rule has saved me countless dollars over the years. Let's add some further structure to this market and make some sense of it. The market peaked right here on this day, so we anchor a volume weighted average price to that. When we knew it was an important level to anchor from was basically a day or two after. So we put the volume weighted average price there, and we'll color code that red just to give it some further structure. And you can see that the most recent rally that came above that declining 5-day moving average was capped right at that level. So what we do is we use the anchored volume weighted handoff price. Once we backed away from there, we knew that was an important level, so we add another anchored VWAP right there. That was also the day of Chairman Powell's speech in Jackson Hole. That's what prompted that most recent round of selling. This morning on Twitter, I had pointed out that we were approaching this level, and it seemed likely that because the 5-day moving average was declining, that we were going to need to at least pull back and digest these gains. Instead, the market completely fell apart at that level, dropped 10 S&P points in the afternoon. Just with these very simple tools that you see here. These are the tools I talk about constantly on this weekly video, as well as for subscribers to Alpha Trends. Now, as you know, coming into this week, we've had a number of things that we were looking at. We were looking at the volume weighted average price off of the low. That failed to hold. The trend line here seems to be holding for now at least. But again, back to the 15-minute time frame, we're still guilty till proven innocent. This market is below the declining 5-day moving average, and that's the most important thing. You can look at this, and I'm sure some people will call this a double bottom. That's because they don't know what a double bottom is. It's only a double bottom if it runs up here and then breaks above this level. If it's a double bottom, we take the height of this pattern, which is basically 402 down to 390, 12 points, and then we come up with an objective at 414. So in other words, we take the height of this pattern, add it to the point where it breaks higher, and then our price target would be 414. I don't think that's the most likely case. I look at this market as guilty till proven innocent. On the daily time frame, we broke below the volume weighted average price from the year to date low. We're below declining 20-day moving average. We're below a 50-day moving average. We went past the measured move objective. We've gone beyond the 50% retracement and coming in close to the 61.8% retracement of the low from this year to the most recent high. So this market just remains in trouble. The best thing you can do is when the 5-day moving average is declining, don't buy stocks. Don't buy the S&P 500. Now, if you're looking at a stock where the 5-day moving average is advancing, that's a different story. So for instance, if we were looking at this company DCP, here's one that I'm looking at as a potential long candidate because it's above a rising 20-day moving average, it's above a 50-day moving average, etc. It's about to make a higher high above that flat 5-day moving average. So if it makes a higher high above there, this is the type of stock where at this point, the trends would become aligned, meaning the daily time frame we have an uptrend, the weekly time frame we have an uptrend. On the 15-minute time frame, this is where the buyers would regain control. If I were to buy there, number one, I'm not going to buy it because it's an energy name and I don't buy those. This is just an example. A worst case stop would go under here. That's the pullback from this low where these arrows are. A tighter stop might go underneath today's low. I only bring this up to mention that we have certain stocks that are above the 5-day moving average, even while the market is below the declining 5-day moving average. So when that happens, we look at the overall market and say, the overall market, the path of least resistance is lower. But maybe you see a stock that makes a lot of sense to you on the upside. So does that mean you just completely ignore this setup? Or do you say, hey, you know what? Risks are higher in this market. I'm going to go into this stock, but I'm going to only trade half my normal risk unit. That's a way that I suggest you get involved in these types of stocks. Knowing what to buy and when to buy is just as important as knowing what not to buy and when not to buy. I've been talking for the last week and a half about ENPH, and we traded it at Alpha Trends right in here at this level up to here, and final piece at there. It pulled back and it continues to pull back. I've also suggested that we stay away from these popular stocks that which have recently broken out on earnings, PANW and Snow. We are not buying these stocks yet for the simple reason that we're below declining 5-day moving average, and we had been below the volume weighted average price. Let's clean this up and put this on a 10-minute time frame. What we were looking at was the volume weighted average price from that gap. We were below that, meaning the sellers were in control from the gap in Snow. They were in control in Snow, PANW as well. So knowing what not to buy is going to save you money as well. Let's go back to the market analysis. The Nasdaq, this uptrend line broke, the volume weighted average price from the lows broke, etc. This is the level that I've been talking about for Alpha Trend subscribers. By the way, again, this video, the end of the week video, I do a market wrap up every single day for subscribers. It's usually only about 4 minutes long. And then I do another video with stock trade ideas. And then I have a midday video. In fact, if you heard me last week, there is a sale at alphatrends.net where you get the beginner course, which is 3 hours of video. You get the advanced course, which is 13 hours of video. You get an annual membership, usually $9.99. You get all that for $799 plus a half-hour one-on-one with me, where we do a live webinar where we can look at charts together that you're interested in and hone your process. So that's on sale right now at alphatrends.net. That ends on Monday. So if you're interested, please take a look. Anyways, back to the NASDAQ. This is the prior level of resistance, and it is now holding so far for 2 days. That's it as support. I don't buy pullbacks to this level that's so far been support. Because why? Because we have a declining 5-day moving average. As long as this 5-day moving average is declining, that level of what people are calling support in here is only a level of interest. I only want to buy it if we begin to move away from there and the 5-day moving average is flattened out. So in other words, we need to see the 5-day moving average do something like this. Prices would maybe go like this. I wouldn't be a buyer there. Maybe they would do this, and then I would be a buyer right here, for instance, because that's where it would make that higher high above the flat to rising 5-day moving average. I don't care if I don't buy the low. People who thought they bought the low on the first, well, guess what? They didn't, because we came right back down to it today. And to see the market rally like this and then give all that up, especially at such an obvious point, the volume weighted average price from Powell's speech, again, right here in the NASDAQ as well, is just unforgivable in my opinion. If you buy properly right here for a short-term trade, one, it should only be a day trade in my opinion, but everyone's going to do what's right for their time frame. We're still broken. We're still guilty till proven innocent. We're below declining 20-week, 30-week, and 40-week moving average. That's a bearish environment. Put your labels on it. Call it a bearish market, bullish, cyclical, secular, whatever you want to call these things. The path of least resistance right now for the average stock is lower. It looks like the SPY is headed for another test of the anchored volume weighted average price from the COVID low. The Russell 2000 is back below the volume weighted average price from the COVID low. Perhaps we're going to go test this prior band of resistance, which held as support again, and lows for the year. We have declining 20, 30, and 40-week moving averages. Just as we see on the shorter term time frames, that 5-day moving average, the longer term market won't make a bottom until we see something like this. And this is how it might occur. It might be, 3 to 6 months down the road where then we finally get above that 40-week moving average. If they don't scare you out on the way down, they'll typically wear you out. We are not likely to see another V bottom in this market because the Federal Reserve is no longer supporting the stock market. Basically, semiconductors had a terrible week, as we mentioned, down 6%. This market was the first one to lose the volume weighted average price from its low right here, that purple line. That was lost last Friday, and then this week we had just a continued bloodbath, down 6% in here. There is no sign of support. There's no sign of support in Nvidia. This is a crappy stock. It's not a good stock. It hasn't been a good stock all year. It's a good company. I'm not going to argue that. I don't really care about the company. I'm trading stocks. I'm not writing papers about what a good company is. If you're interested in Nvidia, it looks like it has the potential to get down to the volume weighted average price, which starts at the 2018 low. That would put the stock right here at about 127, 128. It's not shown on here, but that's also the 200-week simple moving average in that area. So, maybe it's got another 8 points of downside, but even if that's the low, I would expect that it would be similar to this prior low. Let's say you buy there. Well, what did the stock do for the course of the next year? If they didn't scare you out, they wore you out. So most likely, let's say that's the exact low. How long is it going to take for this market, for this stock to really undergo and reaccumulate and start a new uptrend? I think it's at least 6 months away before the path of least resistance overall is higher again, and it's just a waste of time otherwise. You don't have to be invested when the market is going lower. No one's paying you the way they're paying fund managers to stay invested. The biotechs continue to be weak. They have a declining 20, 30, and 40-week moving average. The daily time frame, it's trying to hold in this little area where we have the volume weighted average price from the May low and the March 29th VWAP. But again, there's nothing convincing about it. We still have a declining 5-day moving average, and a lot of people buy this 5-day moving average. They buy when it gets above the 5-day moving average. But if you do, don't trust it. Put a volume weighted average price on the place where it breaks higher, and then if it breaks below it, get out right there. There's no reason to continue to hold and allow that to turn into a loser. If you're watching this on YouTube, please give it a like, share it with your friends, etc. And again, I put this on Twitter last night saying I don't like to be obnoxious about promoting my sale, and these were unsolicited comments from people who subscribe, who are happy subscribers. I bought the access in the May sale. It's changed my trading. It's an educational service. Just buy it. Highly recommend. I joined last time. It's absolutely worth it. No BS approach, which is kind of funny because I'm Brian Shannon. It's a complete BS approach because it's my approach. Brian teaches you a lot that's hard to list, etc. I accepted this last time. I'm not a swinger, but it's absolutely improved my performance for my system. I'm not trying to be all things to all people. I am a swing trader. That's the approach I take to the market, but all of the concepts that I talk about are applicable to every single time frame. Please enjoy your long weekend. Be safe, and I will talk to you next week. Thank you.